Good morning, Tanya.
Hey, Jonathan, I'll just be 1 second.
Yeah, no problem.
Morning.
Morning. I think
Hey.
we've got you in here as a host, so I'm gonna.
Oh,
Yeah, I think Tanya's gonna have to adjust it. She just needs a minute.
oh, sorry. Yeah, because I clicked on your thing because I had deleted my old one.
Ah,
So I clicked on yours and it worked, but
I'm just gonna do some things to you here. Oh no, I can't because I'm not the host.
All right, hello. So yeah, Jonathan, I let her in because I just saw two Jonathans and I didn't know which one was you.
No problem. No problem.
Okay, so she should not be in here as
Premlada's not presenting. No.
All right. So then I don't know if I can kick her out. I can't. That's okay.
Prem, you can just mute yourself and turn your video off, and it won't be a distraction to anybody.
oh,
All right.
Tanya, how are you? Have you guys met before?
No, we haven't.
Oh, well,
Only by
Premlada,
email. Only by email.
Ah, okay. Meet each other.
Yes.
nice to meet you.
Nice to meet you. Awesome. Okay.
So I'm gonna go away, sort of.
Okay.
Okay.
Cool.
Perfect. Yeah, sorry for that. We just are everything's kind of run late this morning and we were just finishing up our morning meeting. I turned around and went, oh no, I need to sign into the webinar.
No problem.
Excuse me. All right. So are we recording? We are not. Are we recording?
Yeah, we've been recording since I logged in.
Okay. That's weird. I don't see the recording.
Oh, I see the little red dot in the top left corner.
All right, if you see it, then I'll go with that.
Okay.
Okay, so welcome everybody to Enhancing the Accountant Bookkeeper Connection series. We have got, of course, featuring CAD accounting. I think that this is not fully updated, so I won't go all the way in here. So anyway, a little bit about myself. Anybody who doesn't know me, I'm not going to go through all of this, just kind of some of the recent highlights I'm really proud of. So I was actually awarded the IPBC 2019 Professional Leader of the Year, which is of course our Canadian Institute of Professional Bookkeepers of Canada, for those in the States that might not really know what that organization is. Our Bookkeepers Bootcamp qualified for continuing education credits in 2018, which is a really, really big deal. And then, of course, Intuit's Global Firm of the Future for 2018. We were a Canadian runner-up for 2017, and one of Practice Ignition's top 50 women in counting for 2018 globally. So that's just some of the recent accolades. A little bit about myself personally. Anybody who's been here before knows me well or create my Facebook page probably knows about this. So my daughter and I like to go and do unique experiences. So meet some of our favorite bands, spend the weekend with some of our favorite actors, which we do every Thanksgiving. Spend the weekend with the actors of the TV show Supernatural. And no, those are not my boys. If you don't watch the TV show, I only have one daughter. Those are two of the main actors from the show, and it's hit its 15th season, and it's the last season, so it'll be sadly missed. But they're still doing the convention, so which is awesome. And then of course there's my dog Rosie, and we like to vacation. So a little bit about myself. And just to confirm this credit, we've submitted for CEC credit. There is no reason to expect that it shouldn't be. Anybody who's been on any of the webinars since September, there was some changeover. I've been promised that all of the back ones are going to be caught up this week. Again, no reason to believe that there's not going to be approved for the CC credits because all of our past ones have, and this one has been submitted. And again, the approval they promised me this week to catch up for all of them, this series and the financial advisory series should be caught up this week. There will be 2 polls that we'll ask that must be answered in order to qualify for the credits. The recording of the webinar will be emailed within 2 days, and certificates for CE credits will be emailed within 2 weeks. And then of course we have, okay, this is where there's a change. So I'm just going to skip through that and get that off my screen real quick. This is, we're working with Jonathan from CAD Accounting. Jonathan and I have many mutual clients. I think we're into the dozens. At this point, he is an absolutely great accountant and was the first accountant that I had actually met that truly embodied the collaboration, which is why we work so well together. And that's why he's the top on our list of, you know, accountants to refer to when we have clients that are either looking for a new accountant or don't have an accountant. And we definitely appreciate all that Jonathan does to try to bridge that gap between, you know, the accountants and the bookkeepers. So thank you. And I will pass the torch over to Jonathan to take over now.
Well, it's absolutely my pleasure. Thank you very much. I'm just going to share my screen. Yeah, we love to collaborate. We're very big on that. And I think it's really, it's the way that the clients can best be served is through collaboration. So everybody should be able to see my screen now, the title page of the presentation. Okay, so I'll just go a little bit about myself. I'm the founder of CADA Accounting in 2014. I was doing taxes since 2007, but kind of the opportunity came to really go on to my own and start into the whole bookkeeping tax practice on my own in 2014. I was very fortunate to be tapped on the shoulder by Mr. Brian Tritt and be asked to join the inaugural Intuit Accountants Council. That's kind of almost like a steering relationship. So it was a group of accountants and bookkeepers who would help Intuit develop their product for us and steer it in the directions we wanted to see it go. I have a long-standing relationship with Intuit, and actually this webinar is a minor variation on the webinar that was done with Intuit 2 weeks ago, creating a beautiful year-end file. I was the recipient of the 2018 Inspire Accountant Award for contributions to the future of the industry. I think that mainly comes from the way we are a born in the cloud firm, and we're extremely collaborative. Really, if it wasn't for the support of the bookkeeping community, there's no way we would have even been considered for that. We are an elite pro advisor firm. I am QBO Advanced certified. All of our staff are QBO Basic certified or better. I am a trusted advisor for several cloud bookkeeping firms in the community and considered a thought leader in technology and accounting. And our vertical that we like to work with are technology-based companies. Our saying that we like to espouse, it's literally on the back of our business card, is communicate, collaborate, and innovate. So today's webinars, I'd like to take a little bit of a different approach. Just because this is a key one. And if there are questions in the middle of the webinar, I'd like to pause after every kind of section to just kind of accept questions. You okay with that, Tanya? All right, I got the big nod there. Okay.
Yep, absolutely.
Yeah.
All right, so our agenda for today, one is why provide a beautiful year-end file. Always start with why. What's the why? Then we're going to talk about the general information that the tax accountant will need, the balance sheet items going over each section. We will have a little bit of a focus on key accounts and then key accounts on the income statement. Most of the work that we do to validate things is on the balance sheet side. When we're looking at the profit and loss, we're looking for very specific things. And then of course for big variances. Now we are a QBO focused firm, so there will be some tips during this presentation that are all QBO focused. I'm sorry, we just don't have a plethora in other platforms. So it's going to be mainly focused on QBO today with regards to technical tips, but the package, what we're trying to create, you can create from absolutely anything, even from spreadsheets. So, all right. Our first question, why provide a beautiful year-end file? A, to look like a superstar to your client and partner accountants. B, to minimize the back and forth with your client and their accountant. C, to ensure you have proper documentation of transactions. D, because you're legally required to do so, or A and B. So we'll give a couple minutes for everybody to answer. Tanya, you give me the thumbs up when we're ready.
Yep, and then just a reminder that both poll questions must be answered in order to qualify for the CEC credits. So we'll give a few minutes here. We are at 44% have voted.
Very nice to see some familiar names in that list. Thank you for joining us.
Yeah, and I know there's a little confusing because I accidentally canceled it. So yes, thank you for
Thank
the
you.
reminder email still went out. And I'm like, phew, at least that went out. So that's great. Okay, so we'll give it another 5 seconds. I'll do a countdown. 5, 4, 3, 2, 1. I will end the poll and share the results.
Interesting. Okay. I'd like to talk about these answers for a moment. There is no legislated requirement that you have to do a complete year-end file. As we all know, there's the letter of the law, and then there's practice, there's theory, and there's reality. And there is no actual legal requirement to do this. Ensuring you have proper documentation of transactions, I think, is more just part of the regular process. If you don't have proper documentation, you're not serving your client well when they get reviewed or audited by CRA or by a third party, maybe in the event of a sale or something like that. A and B is the correct answer. So let's continue.
Yeah. So she's assigning a project where she wants it to go, and the project is.
All right. So everybody can see my screen again.
Okay. So
All right.
the category.
So
food expenses.
the big thing is providing a
be
good year-end file will help keep the client happy and help keep costs down and help keep them out of trouble.
That's okay.
It can enhance your relationship with your accountant, the partner accountant, and in the community. I'm sorry, Tanya, can you mute yourself? The background is.
Oh, I'm sorry. I thought I was muted. I'm so sorry.
We all know that the back and forth is really the thing that's very aggravating when it comes to tax time. Having a complete package can really mitigate that back and forth. The best files we've seen, we always seem to have follow-up questions, but the best files we've seen are very comprehensive. One of the nicest that we see is essentially there's a one-page summary on the front page that tells us the broad strokes of what we need to know and then all the things we need within the package. Figure out a process. Do it once, do it right, make your life easy, create a system. Now, your system might differ depending on how you want to direct it. Most of the firms we work with, the bookkeeping firms, are like, this is our package. And generally speaking, that's absolutely fine. Sometimes there might be additional questions we'll have or additional things we'll expect to see that we don't, but we'll ask about those. More or less, this is all about creating a system that will let you get through these things with ease. So we can't talk about every single situation in this presentation. So we're really going to try and focus on broad stroke basics, things that apply to more different kinds of companies. So let's start with the general information. There are certain pieces of information that we'll need. Oh no, that we'll need. Sorry, excuse me for a minute. I'm sure. Can you guys even read the events slide? The
We can.
Half of that slide. I apologize.
It's black, but we can still read it. Yeah.
All right. Sorry about that. So the big thing is, who are the owners? A shareholder register is supposed to be kept. We need to know who we're working with. Who's going to be signing the return? Who are the directors and officers? Have there been changes in this area? And importantly, have those changes being communicated to the appropriate bodies. Are there any related corporations? Related and associated corporations need to be reported on the tax return. There's a splitting of the small business deduction, and not reporting that can create a massive tax headache for your client. I have heard of stories where a client with five corporations went to 5 different accountants once he figured this out. When CRA caught him, because they did, they came after him for, I believe the number was about $2 million. So it's really something that does need to be reported properly. CRA will figure it out. On Schedule 50, it is supposed to have the SIN number of the owner, the business number of the owner, owning corporation. So those connections can be made. Of course, we need the business number, one of the key identifiers of the company, the legal name, which is what has to go on the tax return, and the operating name by what they're known. Quite often you'll see, a particular business has a name on the storefront, but in actuality, they're a numbered business. We need to know both. And of course, we need the provincial and corporation number. So the next thing is about the events. What is the year end? So year end can be any day. It could be January 2nd. It could be March 4th. Typically, we prefer our clients to have a year end that is leading into their slower time of year if they're a seasonal business, so they have time to address their year end concerns and questions. A change of ownership or a change of control can trigger a short year end. There are other events that can also trigger a short year end, so it's very important to report those. And then the minute book. This is something that we're seeing a lot of small businesses do not have. There are some things that you are legally required to have, and your clients are legally required to have. That is your corporation documents, the shareholder register, and the minutes, the meetings. I believe that you're supposed to have a meeting within 6 months of year end, and that the minutes should reflect anything like changes of directors, major agreements like a shareholder loan that's earning interest, or maybe a policy about shareholder loans, change of accountant, change of lawyer, sale of assets or shares, issuance of shares, declaration of dividends, things like that. This is something that you should be asking your clients for. I don't see any reason why this is something that you can't help your clients with as a value-added service. So, Tanya, can you mute yourself? Oh, there we are. Okay.
Sorry, yeah, no,
no problem.
I was actually trying to jump in there, but I didn't realize
okay,
that
well,
I'd
that's actually
clicked the
perfect
unmute.
timing.
I didn't realize that I'd already clicked the unmute though, so.
I wanted to pause for a minute. Now, Tanya, you wanted to jump in. What's on your mind?
I did. So I just wanted to point out too that even if you are a single shareholder and there's nobody else, and you're not having a meeting with anybody else other than yourself, you still need to have the meeting minutes. Yeah. There is a great place. I know some accountants do have a template you can use, as well as there was a place that I found online. I will have to look for the number or the website address, and I can send it out with the link to the recording for sure. But you can, I think I purchased it for like $100. And as Jonathan said, you can purchase it for $100, give that as a value add to your clients, or sell it to them for $25 to try to recoup it, or something like that. It was fairly cheap, considering I can now reuse this over and over and over and over again if you don't have something already.
What we recommend for some of those small owner managed single shareholder businesses is almost like a corporate journal. So just keep a record of the main ideas and the main plans, almost like a diary or a journal of the business. It'll help you when it comes to making your notes at the end of the year, but it'll also help you look back at what you're prioritizing and what things you need to be working on and things like that. So are there any questions from the audience about any of this? I think this area is relatively straightforward.
Yeah, nothing so far in Q&A or in chat.
Well, if it comes up, by all means, just type in your questions and we'll address them as we can. So just a quick, very important thing that we see all the time. Please make sure you lock your books before your year-end review. If you don't, you might end up having to go back and do work. So we're going to start with the balance sheet.
Sure. On that, I just wanted to jump in. I had a meeting with Intuit yesterday regarding their new monthly review that Arish talked about, which is awesome. I've been actually working with them for almost a year on that, and I found out yesterday that actually came from an idea that I had in a meeting I had with somebody in San Jose, or sorry, in Scaling New Heights, because I'm looking at the review sheet yesterday. I'm like, that's everything that we do. And he's like, yes, we actually modeled this after you. Anyway, one request I did put forward is to have a different password to lock down the year end versus a month end. We lock down every single month, and there's been 2 files of late that we've sent to Jonathan that the balance sheet now doesn't match. I don't know how something got put through, because I lock it down to the year end. I tell everybody no changes, whether Receipt Bank pushed something through with a different date, or the client did something, or we did something, you know, again, not realizing. But I have requested that they give a different lockdown date to definitely help with that. So just thought I'd share that.
And let's take a pause here and just say, after you've done this check, you need to be checking the trial balance, in particular retained earnings, and that should be stable. It should not change. I have seen things like Receipt Bank and HubDoc result in changes to prior periods. For instance, I had one company where it misread, I think it was 2018, and put it as 2010, and the business literally didn't exist in 2010. And also importing information. I'm not so sure about QuickBooks Online, because we don't do a lot of imports with Sazant or things like that. But on the desktop side, it will definitely get past your password. So you could be locked up to, say, November, and when you import December, if something is misstated for December the prior year, it'll still go in the books. So it's something to keep in mind and keep an eye on when you're using those tools. Sorry, Tanya, did you have something?
I was just gonna say, especially if you're in the habit of locking down every month, which we are. We're in the habit of locking down every single month. After we do our reconciles, then we close everything out. Nothing really needs to be changed. And then if our year end is June 30th, and then something comes through with a November 6th date, and we, you know, are putting it through, let's say in December, we've already locked it. We're then saying, okay, yeah, we're going to untype that password and, you know, unclose the books to allow it to go through. Next thing you know, it then goes through as June 11th. Yeah. Because we didn't catch that. So it can happen really easily, and those things are not very easy to try to catch afterwards. So
yeah, I've got a couple of those projects that I'm working on at the moment. This actually brings us to a good point: bank reconciliations. This is a common area where we find an issue. I'm going to go through this slide, and then I'll tell you about how this issue is created. So first of all, ensure that all bank and all credit cards accounts are reconciled. It doesn't matter if there's only like one transaction a month. You really should be reconciling the cash. That's your quality control check. QuickBooks Online, when you do a reconciliation, takes a snapshot of that reconciliation. So it takes all the information you did there, and it has the statement balance and the ending register balance. If you make a change after the fact, then it will not be reflected on that report, but will be reflected on the balance sheet and trial balance. So often in that situation, it's best to just redo the final reconciliation. That's usually the easiest way to do it. But there are times where it's like, okay, so that difference is exactly this amount that was entered late, and it's very easy to find. Sometimes it's that way, but not always. What usually happens in this situation, I find, is a bookkeeping staff member is doing the monthly reconciliation, and then they, when it comes to the accountant, that there has been an addition or a deletion to that period, and that reconciliation is no longer accurate. We need to compare this to the third-party statement. So that's the second document we need for this area. So we need just the reconciliation, which as our firm, we pull it from QuickBooks Online. But if you're working with somebody who's not familiar, you should probably provide it. Again, make sure the register balance ties to the balance sheet and trial balance, and provide the bank or credit card statement that goes along with it. Before you do send that, and before you finalize the reconciliation, you need to check for older transactions. Recently, I was working with an organization and found transactions that were 7 years old still sitting on their books. The irony is that they had been through audits every single year, and the auditors had never said boo, because they felt it did not meet the degree of materiality to be dealt with at their level. So those kind of things need to be looked at. The reconciliation process, that's where your errors and your old and lagging or stale dated transactions come out. Checks issued more than 6 months ago should be stale dated and cleared. The hanging transactions are usually errors. Quite often it's somebody input 2 copies of the same receipt or 2 versions that were very similar of the same receipt. Now I know Receipt Bank is pretty good at catching duplicates, not so sure about HubDoc, but quite often that can result in a double entry. Something was entered but didn't occur, and that transaction was not repaired. That can happen. Regardless, there shouldn't be anything more than 6 months old on the reconciliation. Especially keep an eye on those deposits. If something goes from received to the deposit level and then never shows up in the bank, that could be a key sign of leakage in the business. So I'd like to just pause for a minute, because this is actually one of the most important areas where we find a lot of problems. Are there any questions about this? Okay, let's continue. So on to current assets. We're going to review the accounts receivable age receivables summary, and make sure that those are matched appropriately. We have seen situations where when a bookkeeper couldn't clearly identify a payment to an invoice, they were processing as a new sale. The invoice was left hanging and unpaid, but had already been recognized as a sale. This can result in double counting. Please be very careful about it. If you're not sure, ask, get remittance advice from the client, and ensure that the matching is correct. We all know that, not every payment received for a sale and not every invoice from an accounts payable standpoint is paid 100%. Sometimes there's partial payments, overpayments, underpayments. Those kinds of things can happen. So get remittance advice, ask. Has the bad debt been reviewed and written off? Now, you have to be a little bit careful here. There has to be some documentation as to why you're writing off bad debt. It can't be like, oh, it's over 90 days, so we're just going to clear it. There has to be some kind of effort to collect that has failed, or some other kind of reason why you can't collect that bad debt. So one, for instance, of course, is the company's gone bankrupt. The owner has died and the company is no longer operating. Things like that can definitely result in bad debt. Every now and again, you will get somebody who's absolutely stubborn. You just have to be able to show that you tried to collect that debt, that you were unsuccessful, and have some kind of documentation surrounding that. Emails are quite often fine. So prepaid expenses are those that relate to a period after. Quite often, there are things like an annual software license can be an example. Insurance policies are very common. Security deposits, rent deposits, retainer fees for lawyers, things like that. Essentially, in a perfect world, what I would see would be a list, a schedule of what makes up that balance. And then I would be very happy with that. And that would be a very easy, okay, we're good. We're moving on. So another area that is very important and can be very challenging is inventory. It's important to note that QuickBooks Online won't let you lock a file if you have negative inventory. But if you're using inventory in your sales and purchases, it can let you go into a negative balance of inventory. So you need to review your items list before you lock your books, and make sure that items aren't listed at negative quantities, and also review and eliminate any spoiled inventory, things that are no longer saleable, usable, things that have gone for a walk on their own, things like that. Make sure that there's an inventory count. It's a very common area of fraud. Where maybe an employee sells a television for cash and forgets to log the sale. These kind of things can create leakage in a company and be devastating to a business, depending on what their inventory is, of course. We did have one company a while back that I worked in before I started the firm, where our inventory was managed on a literally per gram basis. It was dealing in precious metals. It was dealing on a per gram basis and was revalued daily because it's a commodity. So some very interesting situations can occur. Another area that can be kind of complicated is WIP. So you can end up in professional corporations, in construction projects and things like that, manufacturing especially, that you could have a work in progress that you need to be tracking. So I just had some notes here. I just want to bring them up about that. So sorry, just one moment.
Okay, and while you're doing
Did
that,
you have any
sorry.
questions? Yeah.
Okay, no, yeah. I saw somebody actually raise their hand. If you've got any
Awesome.
questions, if you can type it in Q&A, and that would be perfect. So that way we can track, you know, when the questions are coming up and coming in, we can track what we've answered. So go ahead and type them in there. That way everybody can see. So I'm not sure if the raise of the hand was by mistake or by not, but that would be great to type any questions in there.
So are we missing any of them?
Sorry, I had some notes that were visible on the PowerPoint version I did that aren't on here. I just want to bring them up and make sure I've covered anything. Let's try and address that question. I'll just go over the actual documents that we're going to be looking at again. We're going to be looking at the aged receivable summary, and we're going to be looking at asking, we're not going to be looking at, we're not auditing or reviewing the file, but we're going to be asking if there's documentation about any bad debt and if bad debt has been appropriately recognized. We're going to look at prepaid expenses. Preferably we get a schedule. It's perfect, fantastic. More often than not, we're creating that schedule ourselves and asking if there's anything else that should be included. For inventory, what we want to see is an account for each type of thing. So if you're a manufacturing if you're a manufacturing company, we want to see the raw materials, we want to see the work in progress for each item, and we want to see the final count of each finished goods. So I was going to say about the WIP for service-based businesses that it's usually driven by the operations of the business, but this can be something that's very important if it is a material amount to be able to speak to should CRA ask. So, all right, let's move on. That question never came in, so hopefully we'll get that question. Next, we're going to talk about the physical assets. These are, you know, property, plant, and equipment. So this is something, the fixed asset register is something that every company should have. It should list what the fixed assets are, when they were purchased, where they're located, how much they originally cost, if they're assigned to somebody, who they're assigned to. In larger organizations, they should actually have a unique identifier on the asset. I remember doing an audit, a telecommunications audit, and every single phone had a unique identifier. This is back when desktop phones were actually rather expensive. Also, each asset needs to be reviewed to ensure that they still exist and that they still function. If they don't function, or if they've gone for a walk, they need to be written off, and possibly there's something you need to investigate. So with regards to the documentation, we would like there to be a fixed asset register. It's not something we're asking to see usually because we're just doing taxes at most, notice to reader statements, but this is a good practice that every business should have. Next is the continuity schedule. Continuity schedule shows the additions, disposals, and depreciation of those fixed assets. Sometimes this is left to the accountant, quite often it is. Sometimes this is performed by the bookkeeping company. Regardless, I would suggest using the CCA prescribed rates just to try and line things up with the tax return as much as possible. Intangible assets, again, you should keep a register. These can be very important to technology companies. All the value can be in the intangible assets, literally all the value of the business. I know that there's a software company that we're working with that all their value is in their software that they've developed. It's also key for shred claims if the business wants to make those kind of claims. And the question should be asked if the assets should be impaired. So if you have a patent on something that has, well, if the patent is expired, for instance, or if it's no longer relevant, then you should definitely be impaired. Some of these things, I mentioned patents several times. It just tends to be what we work with, but it could include things like goodwill from a previous purchase, trademarks, intellectual property, and the list goes on. Incorporation, restructuring costs, For lawyers and accountants, when we get to the income statement, that's something we ask to see all of, is all of the accounting invoices, all of the legal invoices. Loans. If part of the loan is due the next year, it should be in current assets. If part of it is due in after next year, then that part should be in long-term assets. That's the practicality of it. We've seen many other behaviors, but really that's the way it should be split up. Ensure the interest received is in the appropriate account, income account, not in the loan account. We've seen this all the time. Keep an up-to-date loan amortization schedule and make sure the loan is documented. If it wasn't written down, if there isn't a loan agreement, it won't stand up in court. So make sure that, and I'm going to emphasize this more than once, make sure that the loans are documented. So are there any questions about this section? I think we have a rather quiet audience today. Okay. Let's move on to the liabilities. So similar to accounts receivable, we're going to look at the aged payable summary. It again should be cleaned up. Sometimes there's items that get entered twice. We talked about that coming from Receipt Bank and from HubDoc and the like. It can happen manually as well. And you should check to make sure the balances make sense. You should clean up those little hanging balances. Like if you have a balance of -1 cent, you should just clean that up. It just makes you look better. When we get something that has a bunch of odd little balances in it, it kind of gives a trigger as to what we expect to see with the remainder of the file. So cleaning those up can make you look good. For accrued liabilities, these are items for which you have an expense in the current period, but you haven't received the invoice yet. This is very common for lawyers, almost always for accountants, for the tax fee. Again, just create that schedule. This is the balance. This is what makes up that balance. That's it. We would check it and we go, okay, that matches, that makes sense, let's move on. Back to loans. Again, the current versus long-term portion of it, and making sure the interest is in the appropriate expense account, not in the loan account, and make sure it's documented. So any questions? We're quiet, so we're kind of motoring through a bit here.
Well, let's hope that that means that everybody does beautiful files, right?
Yeah, every file is perfect, right? Okay, so this area are key balance sheet accounts that we have seen issues with in the past. I'll describe some of them as we go through them. The shareholder loan, that comes up all the time. Discourage the entanglement of business and personal transactions. I know all of our clients love to use their businesses as a personal bank account, but just the more separation it has, the easier it is for both of you to manage, you and the client, and for CRA to understand should that ever get reviewed. Debit balances are very scary. If you owe the company, CRA really cares. If the company owes you, CRA doesn't care at all. If you have a receivable from a shareholder over more than one fiscal period, CRA can force that into income for the shareholder, and there will not be a write-off for the business. This means that the corporation is being taxed on that without recognizing that expense, and then the shareholder is being taxed, and results in not quite double taxation, but pretty close to a double taxation situation. Each shareholder loan has to be allocated to the appropriate shareholder, and make sure that they review it and that they're in agreement with it, with the shareholder loans. Quite often we find that we're doing a fair bit of cleanup in this area. And be careful. I know that cloud bookkeeping services is fantastic at almost, for lack of a better term, policing their clients with regards to what goes in shareholder loan versus the profit and loss, and they do a very good job with that. But this is a very common area of fraud. I mean, from people trying to write off their daughter's divorce, or the lawyer's fees for buying their principal residence, or all kinds of different things. I've seen definitely people push the limit with items that should be in shareholder loans but are showing up on the income statement.
Yeah, and then basically we look at everybody and our responsibility to our clients. And if they don't agree, then we won't work with them, is we want the books to be audit proof. And, you know, I've been dealing with CRA and audits and the tax side things much longer than I've been doing the bookkeeping. So that goes back to 1997. I know what CRA is looking for. And yeah, if it's questionable, like, no, it needs to be justified. Is it reasonable? Is it justified? Can they prove it? If not, no, it goes shareholders. End of story.
Yep. That's a good policy to have, and it helps keep your clients honest, and it really helps keep them out of trouble. When you get those clients who want to write off everything, I mean, let's be frank, they're a lawsuit waiting to happen. When they get caught, they're going to blame you. It doesn't matter if it was your fault or not. You're going to get
Not to mention, our reputation with CRA actually does
Yes.
have meaning. I had experienced an HST audit that we knew was coming through. She was a retail store. Her first one, she bought $30,000 worth of items of inventory for the store. So we knew that she was going to be hit with an HST audit. So we had everything all ready, just right from the time. Within days of filing, we said, this is what they're going to want. We had everything ready to go. And then she called and did a follow-up, 2 months later, hadn't heard anything. And the response that she got, and this is when I was like, wow, is the person said, yep, absolutely, there should have been a review, or open the file, and they actually spoke out loud. And she's a friend of mine as well, too. But the CRA person spoke out loud under their breath and didn't realize it. And they said, wow, I don't know who this person knows, but they must know somebody or have an amazing reputation, because it got assigned to an auditor. The auditor looked and just, said, nope, no problem with Tanya's work. I guess I'd worked with her many times, and cleared it. I was like, wow, that was pretty great.
And that can matter. We have one client who had that review years and years ago, back when we first started working with them. And it's resulted in no other reviews of the HST.
Exactly.
It was perfect to the penny. They literally couldn't find a nickel. And so from my understanding, is that creates a priority level. The reviews are selected randomly, but if you pass with flying colors, you'll get bumped to the bottom of that list and you'll never come up again.
And that's exactly, they keep files on us as the preparers, as well as on the companies. Another good thing, this kind of ties into what we talked about on Beyond the Cloud on Friday, is audit insurance. So if you're self-insuring or charging a little bit extra in the books to say, listen, we're going to go ahead and we'll take care of, any audits for you, we're going to add that into this package. You can pay to have that coverage buffer in there, and you do these books thoroughly, you won't have to worry about that. We do that on our personal side for income taxes, and we ended up spending half an hour dealing with, post-assessment reviews last year, and made $30,000 of it, or sorry, $3,000 of additional income for people that purchased that. So if you think about, the same thing on your books, if you're giving them that extra saying, we'll do that, we'll charge, 5% more or 10% more, we'll cover any CRA audits. If you're self-auditing as you're going through, you won't have to deal with it, and that's free money, basically.
All right. So I'm going to continue on here. I know we got kind of off on a track, but we've been talking about HST audits, so it's a good time to talk about taxes payable.
Oh, there is a question as well, too.
Okay, can we pick that up at the end of the slide?
Absolutely, yep.
All right, so taxes payable should be reconciled with what's on record with CRA. Differences should be identified and explained. Hopefully the year-end aligns with the filing period. If not, it can be a trickier prospect to look at that. This is a very common area that we're not seeing being completed by bookkeepers. Again, do it once, do it right. Understanding how QuickBooks Online functions with regards to sales tax can really help. For instance, journal entries to sales tax accounts, if they are not done correctly, will not be recognized in the sales tax filing process. So it's very important to make sure and review these accounts. I would suggest reviewing them, whenever you do like a HST payment or an HST filing, for instance, for sales tax. Source deductions, maybe not quite as often, maybe once a year. Then corporate tax, maybe once a year. But I would look at these on a fairly common basis and just try and keep them in line, because it can create quite a hidden issue for the client if the taxes payable really get out of line with what's on record with CRA. So finally, our equity transactions. There's not a lot of transactions in this area, but you would be absolutely astounded by the number of books that we see that there are no shares issued, at least not on the books. According to the incorporation documents, there are shares issued. There's no value assigned to them. There's no idea of the number of shares, things like that. So those things really should be there. It's vital to understanding who owns the company and who's responsible. A change in control, we talked about this earlier, that's either a sale or somebody losing control of the company to one of the other owners or something like that, can result and trigger a short year-end T2 tax return. So the date when they're choosing to do that can be very important as well. I'm working on 2 right now, and the dates are really annoying. One is like July 3rd. It's like they couldn't have made it June 30th. And then the other one is December 17th, right in the middle of a month. So those are very important. Those are big multi-million-dollar deals for e-commerce companies. And, you know, it makes, they end up spending probably about an extra, I'd say 50 to 80% on accounting and bookkeeping fees as we're trying to reconcile in the middle of a month to close a transaction and continue off of the trailing bookkeeping. Another area to watch is loans can be converted to equity upon certain events. So know your loans, know what you're getting into before you accept money or before your client accepts money, and make sure it's well documented and well understood. This is an area where we've seen several issues before. So there is a question. Shareholder borrowed from company has to be cleared in 18 months or what? So if you take from the company, it's supposed to be paid back within a year, but it's kind of rotating. So let's say in 2019, I borrowed $20,000 from my company. In 2020, I pay that $20,000 back, but then I borrow another $20,000. This kind of rolling, they don't like to see, and they can give a very difficult time about that. I would say within the year, and I would really keep people honest about it. We've seen some big problems with this area when it comes to preparing a business for sale. When you're selling a business, if you sell the shares of the business, you can qualify for the lifetime capital gains exemption, which is the biggest tax break available. And if you have only active business assets, you can qualify for that. If you don't, then you can end up in situations where you're disqualified from that huge tax credit. So this is somewhere that, again, if it's getting into a debit balance, make sure that it's policed early and policed well. So we're going to move on to the income statement, where we don't have as much to talk about in the income statement. The big things are the type. Let's start with the income side. So there's 2 main types of income. There's passive income and there's active income. Passive income's taxed at a different rate than active income, so it needs to be separated. So these would be things like licensing fees, royalties, different kinds of things that earn income without really doing anything. These can also be very, very useful in establishing the value of a company. A company with a strong licensing agreement can be worth literally billions of dollars. Product sales and services are active business income. Understanding where they're occurring can be very important to determining the sales taxes to be charged. In the e-commerce area, I'm sure everybody who works in e-commerce has heard of the Wayfair decision. It's very important to know that. Again, this is a common area of fraud. Staff may sell a product, pocket the cash, resulting in inventory shrinkage that is really theft. As regard to services, if the owner or operator is a professional, that's somebody who's governed by a supervising body, the Law Society, CPA Ontario, things like that, they usually have to be classed as a professional corporation, which is not eligible for the small business deduction. I suggest, especially in the service-based industries, that maybe not time tracking, but some kind of understanding of how time is being used be made available. At CATA, we use T-sheets, and we use that to understand where there's training gaps, where there's things we might improve on, things like that. For instance, I was reviewing the pricing of a client yesterday, and I think I found about 2 hours that we can save by increasing our use of supplier rules in Receipt Bank, for instance. So these are areas where you can add a lot of value and maybe upsell T-sheets or something like that. I'm just going to have a quick look. No questions right now. We'll keep moving. So key expense accounts. You've heard me talk about legal, accounting, and professional fees. Again, don't let your client include anything that is not strictly business related. A good accountant will ask to see all the invoices. Some items will need to be capitalized and amortized. Those are items to do with restructuring, trademarks, patents, incorporation, things like that. And some items need to be claimed personally, not within the corporation. So those are some examples. All right, let's get into some administrative things. Meals and entertainment. All meals and entertainment need to be segregated into specific accounts. It's okay to have different types of accounts, such as travel meals and staff meals and things like that, but they need to be easy to identify. The CRA administrative requirements are that you write the name of who you met on the receipt and why. And for gifts, you need to at least have a schedule or write the name and contact info of who received the gift on the receipt. Don't mix it with personal, and don't pull the gift card scam. This is where somebody goes out at Christmas, buys $2,000 worth of LCBO gift cards, says it's gifts, and then keeps them and drinks off that for the rest of the year. For vehicle expenses, make sure there's a clear understanding of who owns the vehicle and book it or don't book it appropriately. A lot of times we see corporation carrying vehicles on the balance sheet that are actually owned by the individual personally. There are ways to get that in there, and there are times when it is appropriate, but it should be documented. Beware of how you're claiming the HST on vehicle expenses. I've seen a lot of double dipping in this area. And keep in mind the CRA administrative requirements. You have to keep a logbook, including the departure and destination address, the date of travel, and the mileage used, and you're supposed to keep the reason as well. So again, these are administrative requirements. They're not legal requirements, as many people would have you believe, but just being compliant is a lot easier than paying for lawyers. So are there any questions about this section? Okay, let's move on. We're getting on there. We're getting towards the end. So don't be shy with those questions. So non-deductible expenses, penalties by CRA, interest charged on overdue balances by CRA, and legal settlements with CRA, parking, speeding, and other moving violation tickets. Say hi to Julia. They should all be classified in a different category, as these are not deductible. A lot of this will come out of reconciling the tax accounts. You'll find the interest and penalties and so on. So this brings us to our final poll question. What is most important in preparing your year-end file? Okay, I don't know what happened here. I apologize. To send one complete package, it was to ensure all your transactions are documented, or to ensure that you've done the tasks you need, or all of the above. I apologize for that. That B is supposed to be to ensure all your transactions have been documented.
Okay, just a reminder that you need to answer both poll questions in order to qualify for your CC credits. We're at 70%, 80%. This is great. Perfect, 100%. We'll just stop it now and share the polls.
Awesome. All right, the correct answer was A and C, although the way these are written, it's definitely D, all of the above, because A and B are the same. I apologize again for that. But yeah, it's the most important thing is to do it once, do it right, and make sure you've done what you need to do. That's really what it is, A and C. So, All right, let's move on. Always nice to have a good quote. If you fail to prepare, you're preparing to fail. I believe this was Reverend, where is it? It was some Reverend CK something or other. I can't remember right now. So moving on. Things that make you look bad to things that make you shine. Not knowing what to provide and providing items piecemeal is not a great idea. Not having the appropriate accounts reconciled, not reviewing them to ensure that they accurately reflect the position of the company, and not reviewing the balances to make sure they make sense, all make you look bad. There have been files we've got that have had credit AR, credit inventory, and debit AP, and it's just like, all right, take another look at this and send it back to us when you have, kind of thing. Things that make you shine, again, do it once, do it right, create a package, create a process. There's seriously some of the packages we get, like we would love to work with these bookkeepers more on tax clients. Reconcile all the key accounts, or all of them if you want. If you are going through an audit process, you should be reconciling every account and reviewing every transaction. Review all the accounts to make sure that all the information is accurately reflected. Again, if you're going through an audit process, I'd also make sure it is all documented as well. And finally, reviewing the account balances to ensure they make sense. So that's it for me. I'm Jonathan Carter. Here's how to get a hold of me. I'm extremely collaborative, so please don't hesitate to reach out. And I believe we have the perfect, almost perfect timing. I think we have about 5 minutes left for questions or discussion. Tanya, can I bring you back into this for a moment?
I am here.
So what are some of the things that you would suggest as a bookkeeper? What are some things that you like to do?
Well, a couple of things. So going back to the shareholders, we like to, especially on clients who have, who use it as a personal bank account, no matter what we say to them, we actually are putting in details. So that way, if you're pulling the report, you can see right on that line, like right there through the descriptions, oh, this was the car, this was this was that. It makes it a lot easier for whether it be the bookkeeper or the accountant who's having that conversation with the client. You say, listen, you owe the company $30,000. This is a concern. The client, no matter what conversations we have with the client, they go, oh, I didn't know that. And, we can pull it, and you can just very easily pick off because it's right there in the list versus clicking into every single transaction. When we do our HSTs, we have a very tight HST workflow. We follow Marnie Stretch's workflow. Anybody who is on my YouTube page, there is a video that we had Marnie come on and do a webinar on that and her workflow. So we are checking for things like the HST coding. We are checking to make sure there's no duplicates, that we don't see a bill and an expense for the same account. We're checking the balance sheet in the sales tax center, and we're putting it back into, back into alignment if there's anything that we couldn't help but do by journal entry or something like that. So those are some things that we definitely do regularly.
I want to kind of chime in and say, like, people talk about accountants like sometimes like this, and it's really like the bookkeeper is so important to the company. Really important. I mean, garbage in, garbage out. CPA, the requirement for us to do a tax return is to take the numbers we're given and put them in the tax return. That's what they would want us to do. We kind of go a little bit beyond that. Actually, we had to have a bit of a talking to by CPA to make sure we weren't going too far in how we were looking at files before filing the tax. So really, I mean, having the quality of a good bookkeeper is more important than having a good accountant. You could have the best accountant in the world. If he's getting or she is getting bad data, it's not going to matter. So you guys are like the first line of defense for the company. You're the ones who make sure that it's actually happening correctly.
Yeah, exactly. And that's exactly why, too, we won't deal with people who don't like the way we do business. If you've got somebody who just wants to take it from the bank statement or is refusing, we will have a conversation with them, and we will actually fire them and offboard them, because we don't want our name attached to a file like that. Because again, we've got an amazing reputation with CRA. They are wonderful to deal with as soon as they look up and they kind of see who we are. They're amazing. If that changed because they start seeing crap or a lot of audits, whether it be a regular, audit, a payroll audit, an HST audit, if any audit doesn't go through and we start having all of these changes to audits because of the bad paper trail, that affects our reputation, which then affects the time that we're spending, which then in turn affects our reputation. And it's a domino effect.
Clients too.
Absolutely, absolutely.
I think there's no real question, no more questions. Thank you, Afsana.
Yeah.
Very nice. Thank you for joining. But I just wanted to tell a quick story. So somebody who's very dear to me was going to an accountant who you did not pay. He got to keep half of your tax refund. I'm sure everybody's ears just perked up at that and go, well, not everybody deserves a refund. This accountant was committing fraud. They were producing fake dental receipts from a fake dental practice and putting through tons of medical expenses for all of the clients. Well, this person got caught. This person got jail time, and every single one of his clients got reviewed for 5 years. For 5 years. And every single one of his clients ended up paying CRA more than what they, like the equivalent of what he would have gotten paid from these.
And that happens a lot. I know of an accountant, that we lost several tax clients because I wouldn't do what they wanted to do. And these were police officers from the Toronto Police. They wanted me to go ahead and put through, all of their expenses and their mileage for their court days without having that T777. And I refused to do so because it's not proper. And I know that they're not allowed that. They all left me to this accountant in Toronto. He did jail time. They all had to pay back tens of thousands of dollars plus penalties plus interest. So it's very common that happens. And
there's no defense for the client when they sign that document. They're absolving the preparer of all responsibility in preparing the return. So really reviewing it and understanding it's very important. So we're at the turn of the hour. Thank you very much for coming. Tanya, thanks so much for hosting.
Thank you so much.
We are still looking for topic ideas for this year. We do have the one lined up for February, but I would like to have some more thoughts. So feedback is by all means welcome. I am available at these areas, and I hope to hear from you.
Okay, and then we'll be doing February's, and then March and April will be canceled due to tax season, and then we'll be picking back up in May. So
yes, so I have a plan for February, but if somebody has something that's a really good idea to lead into tax season, by all means, let me know. I thought this one would be very important, but if there's another idea out there, I'd love to tackle it.
All right. Well, again, thank you very much, Jonathan. Thank you very much, everybody, for attending. And again, we'll have within 2 days, you'll have the recording and then CEC credits. Again, they promised me this week. So within 2 weeks, everything will be caught up from all of our September to current.
Yeah.
Okay. Wonderful.
Awesome.
Thank you so much again. Have a great week, everybody.
Take care.
Okay.
Bye.
Take care. Bye.